Hi everyone, Rich Sassman here with Century 21 Affiliated. This is Scott Swinford with Hancock Mortgage.
Hey everybody.
So, new socially distanced studio that we have going on. We're back after a few months layoff to start the new year off right. So,
right. And hopefully it is a new year and it's starting off new. All the silliness that we had last year is behind us, and we'll be able to start getting in the studio, filming more like we wanted to, and doing some additional activities.
So once again, if you have any questions, feel free to post them in the comments below, and then we'll address them in our next episode. So, first of all, since layoff, how has the market been with mortgages?
Oh, Rich, it is smoking hot. Let me tell you. Interest rates are at their 50-year lows or just above it, so they're still really, really, really low. We're doing a lot of refinances. I've told anybody who's got interest rates in the threes that we should talk just to see where we're at.
Yeah.
I've got a gentleman who is refinancing a VA loan. We took out for him just about a year ago. He was at 4.25. We were able to lock him at 2.5. Saved him about $420 a month on his payments.
Who can use an extra $425 a month? I mean,
exactly. Now it doesn't mean that everybody's going to get that interest rate. So but for the loan program we were doing, he's a veteran, and the credit score what he has, we were able to get that. So
yeah, and would you say anybody that's in the upper threes or higher for their interest rate should at least look at refinancing?
Absolutely. Yeah, I think anybody that's in there, even middle threes, it would be worth it. And you and I have talked a little bit even off the air about it, but sometimes it makes sense to refinance even if you're getting a higher interest rate. Now we're not seeing
sounds
a lot
weird,
of that.
but it's true.
Excuse me, we're not seeing a lot of that, but there are some times within a good debt plan where that you can refinance at even a little bit higher rate, include a bunch of, if you have credit cards or other loans and things that need to be paid off, and then take that same amount that you were paying at the higher interest rate, pay it at the lower interest rate. Not only will you have those paid off, but then you'll be able to pay your mortgage off sooner too.
Yeah, and the main thing about refinancing your credit card debt and everything into your mortgages, taking stress off your shoulders. 2020 was such a stressful year, and if there's an option for you to eliminate thousands of dollars in your credit card debt because you own a home, and chances are with how much home values have gone up, that there's a good chance that you may be able to do this. First step would be getting a property valuation to see if the numbers are similar to what you were thinking that your house is worth now, and those are free, done by me, so feel free to contact me for that. No obligations or anything, but the main thing is, would you rather pay 17 to 25% interest on, or 2.85% interest? And then by eliminating the $300 a month credit card bill minimum payments, then that gives you that little breathing room where you can start saving money for your future. You can apply it to your mortgage if you're getting comfortable again, and then your mortgage gets paid off that much sooner too.
Yeah, it makes a lot of sense, but again, it's not a cookie cutter thing here,
No.
Rich. We need to look at each individual to see what type of debt they have,
Yes.
how long that debt's going to last, how much equity they have in their property, what their current interest rates and things are. So I'm not saying everybody that's watching this should go out and refinance. What I am saying is that if you believe you have an opportunity to do that, and are just curious, let's talk. It doesn't take long to run the numbers, and then you'll know for sure whether it makes sense or if it doesn't make sense for you. And that's part of being kind of the advisors that Rich and I have always tried to be. I'm not going to say you should call me so we can refinance your loan. What I'm saying is let's talk, let's have a conversation, and then that way you know if this is something that makes sense for you. Get all the facts on the table, and then have you make the decision of whether or not it's something you want to pursue.
Yeah, and you know what, Scott and I actually have done this personally already. Because I told him my numbers, I told him everything, where my interest rate is and everything, And he told me it doesn't really make sense for me to refinance right now. Instead of just saying, "Oh yeah, refinance. I want the business and everything." No, he was honest. He told me exactly that you're on the verge of it making sense, but it's not quite there right now. So, which I appreciate because I mean, unless you run the numbers through the mortgage system and whatnot, you don't really know if it makes sense or not. So
Right, and we have the software to be able to do that. Rich, I think I told you we were chatting the other day that kind of during the what little off time we've had, because the end of the year was crazy busy.
yeah, we haven't had a winter yet.
Um,
The winter market, which is usually slower, has not hit yet.
right, and purchases have stayed pretty stable, but just the increase in refinances. But I took a program. It's called the Certified Mortgage Advisor Program. I think less than 1/2% of all loan officers in the country have been through this. And a lot of it is just how to understand what's happening, knowing the mortgage markets, being able to look at the 30-year Fannie Mae bond funds and the Treasury notes and things and determine which way that rates are going, and also to better be able to advise our clients on what their options are. Now, a bunch of years ago, I took another course that was very similar, but this one is much, much more in depth, and it's really designed for you as a client or as a customer, so that we can better serve you. Trust me, it's probably one of the hardest classes I've taken, and I guarantee you it was probably the hardest final test I've ever taken out of all the classes I've taken, even the mortgage and what I did before this. So, but there was a lot to it. But the idea is the knowledge that we get to help our borrowers, and that's why we do it.
Yes.
I don't charge you any more for it. There's nothing like that. It's not like, it's not a recap. It's just an added value to be able to do these things.
And that's the thing. If there's a class that I can take, I believe education is the key to success. Whether it's formal education through going to college or education going through trades or something like that, I believe whatever education you can get will benefit you financially and just in general in life. So I'm all for taking classes like that to help me help our sellers and our buyers and whatnot. Anything I can do to make it better, there's always room for improvement and growth. And I mean, we're setting up for my team class with you with about VA loans and everything this month. So we're going above and beyond, trying to make sure we know every single thing that we can possibly know about VA loans, so we can better inform our clients on the benefits and if there are any negative parts to it. And that way we can just speak with truth and honesty with everybody instead of just saying, "Well, I heard that it goes this way." How many times do you hear agents say, "Well, I heard VA loans are horrible," and whatnot, and it's not true?
I haven't heard that since this morning, actually. And not a local agent, but on a Facebook page where they talk about these things as if it were true, but there's a lot of myths and misconceptions.
Yeah.
And that's why we agreed to come in and we teach these classes. And you've been part of this too, right? You've really followed a lot of the VA stuff that we do, but it's called How to Better Serve Those Who've Served, because the VA loan program is unique. And it's something that we need, as lenders, need to bring the real estate agents in so that they understand it also. Not only how to write the offer, but the way to structure it and that. And I've heard of numerous agents who said, "Well, we don't want to accept the VA offer because, quote unquote, they don't have any skin in the game." Well, they do have skin in the game. It's because they signed that blank check that says they're willing to give up to and including their life for us, for our country. So the VA has said, "We appreciate that. We will allow you to finance up to 100% of the purchase. So you don't have to have a down payment."
Exactly.
Except about 18% of the veterans do have a down payment. They put the money down, but you don't have to, and that's
Exactly.
what they've got.
I mean, to me, what I tell my sellers is the house is in good shape. We're going to get a check at closing with any one of these options. So why wouldn't you accept it if it's the best offer? I mean, if it's not the best offer, that's one thing. But if it's the best offer, And we were talking about this off camera. I just had sellers accept a offer over a cash offer. Yes, a VA over cash. Both were requiring appraisals, but the VA has this nice little thing that an appraisal could be adjusted if it puts the veteran in a hardship. So, so it's the only appraisal that can be adjusted up. So for having a multiple offer situation, having one appraisal that could be adjusted up if we end up in a rough spot with a low appraisal, why wouldn't you go with the one that that has a chance of making that right? So we chose. So my clients chose to go with that offer, and everything worked out good. We closed just as fast as basically a cash deal would. It doesn't take 40, 90 days or whatever to close it. It takes the same time as the other loans to close in general.
Right.
So in fact, the appraisers have less time to get it done than the FHA loans. Am I correct on that?
Yes, we're seeing an average, and they've come down a little bit, thankfully, but it's been taking an average of about 14 to 18 days to get appraisals back if they're conventional or FHA. In Indiana, the appraiser has 5 business days to return a VA appraisal, unless they go into the system and they notate it. For instance, if the appraiser couldn't have gotten hold of the seller in this case for a week, well, they would just note and say, attempted to make contact to do the appraisal, we're unable to. We need more than 5 business days.
Yeah.
But we're seeing them back. We've got a couple of appraisals or appraisers that return them in 3 to 4 days.
Yeah, and to me, that's just amazing that a program that has such miscommunication about has the best options for timing. I mean, for when it comes to appraisals. I mean, soon as I explain this to other agents that maybe haven't done the research yet on these loans, they always go, "Oh, I didn't know that. Oh, I didn't know that." And then I'm like, you know what? You may want to call Scott, because he's willing to talk about any loan program as long as he can. So he loves what he does, and he loves educating us on it.
Right. Well, we try to advocate and educate, and that's one unique thing about the VA program is, and the VA has said, the VA has told the lenders that they want to do everything they can to get the veteran into a home. They do have there are some qualifications. They want to make sure it's safe, sanitary, structurally sound. You can't have water leaks. It has to have a bathroom in it. You can't have a big hole in the roof that you call a skylight. It wasn't designed to be there. But as long as it meets their criteria, as long as it meets the minimum property requirements, the MPRs, there's generally not an issue. And it's a great benefit for the veterans. And again, Rich, and I appreciate you bringing that up too, is because there are an awful lot of myths and misconceptions out there when you're dealing with the program.
Yep, and that's why we do Mortgage Ship Monday, so we can help throw some education out there, some extra knowledge. And once again, if you have any questions, comments, or anything, please leave them below. Like our pages if you want to see more of this stuff. It's great. We're here to help everyone, and we want to make sure that the information gets out there. So if you have any questions, just ask it. Like we had a long-time watcher that we see watches every week, and they just they finally asked a question 3 months later, and they finally got their answer. And so is that just coming out and saying, "Hey, I have a question." So
absolutely, yeah. And whether you do that online or offline, if you reach out to either Rich or I, or if you have, if you're friends with me on Facebook and you don't see Rich, or you're not friends with Rich, either send him a friend request or shoot the information over to me, and I'll make sure I get it to him. I like to kind of do the stay in your own lane thing. I have clients all the time that ask me financing questions. I'm here to help you. Ask me real estate questions. That's not my wheelhouse. I would rather turn you over and say, you know what, consult a real estate agent when it deals with how to write the offer or property condition or things like that, because that's not my specialty. I want to stay in my lane and do what we do best and rely on our partners like this, because, and really, I think a teammate would be a better name, because we're all part of that home buying team. With the buyers are certainly part of that, as well as the sellers, the real estate agents involved, the lender, my processor, my underwriter, the appraiser, the title company. We're all in this together to get to one goal, and that's to get our clients into a new home.
Yep. Pass keys from one side to the other table. That's all we want to do. So, other than that, thanks for watching. Please give us a like, love, heart emoji, whatever. Other than that, that's Scott Swinford with Hancock Mortgage. I'm Rich Sassman with Century 21, and we will see you next Monday. Have a great day.